I am bearish on browsers. Perplexity, if it was a stock, I would short it. Agentic could evolve. MCP, I don't know. But nobody knows. OpenAI is buying NVIDIA chips, so everybody's giving money to NVIDIA. The funny thing is it's giving it back to OpenAI as an investment, so their valuation is going up. It's like, I'm going to spend $1 trillion, give it to you. You're going to go back and invest the same money into my business. My valuation is up. I raise more capital, right, and spend more, give more money to you. It's unsustainable at some point, and that's what a bubble is. I would meditate 20 minutes on this slide if I was not recording. It's interesting to see how all of this is House of Cards, in a way, right? It is a structure. It is real, but it is House of Cards. But I don't have to prove it. I know my conviction. I know how we operate. I know my execution style, and that's the moat. I am the moat, right? As a founder, you got to be the moat. What decisions you make. You're riding very uncertain times. Which direction, which distractions do you avoid? And more or less, can you avoid FOMO? That's the moat. I'll tell you. You don't know the right products. Your value lies in iteration speed. If you can build a product, throw it out, get feedback, iterate fast, you're winning. Most companies can do that. Big companies can iterate fast. Good morning, everybody. Welcome. So I'm going to go through AI Eats the World presentation by Benedict Evans. He's a prolific, well-known, very, very interesting, data-driven, independent researcher and writer. And twice a year, he produces this giant presentations exploring the strategic trends in the tech industry, unusual, contrary takes, which are not AI slops. And he has very interesting views on AI. I think he's one of those guys who still is very skeptical. And most times than not, I think his long-term ideas are correct. You can follow him on LinkedIn, Benedict. And just 3 days ago, he dropped this 90 slides on tech and AI and the shift, which is very interesting, and I haven't seen it, and I thought it would be interesting to just react to it, look at it from my lens as a founder of an AI company, bootstrapped. There's always a threat of what's going to happen, and most times than not, we are betting on the future. The success is, my role, I feel, is to make those 3 or 5 years bet, and if I'm slightly right, we get to win, and if I'm totally wrong, the business won't survive. Okay, so let's begin. AI eats the world. The next platform shift. Every 10-15 years, a platform shift reshapes technology. Now, most of you watching this, if you're, I was born in this era. We saw the PC come in. I was in India, and I don't have to talk about the shift. The web came in. We grew up early on with the internet, the IMs and the websites and the e-commerce totally took over, gave rise to Google, Facebook, other internet companies that dominates the S&P 500 now, and then the smartphone. Now, this was very interesting in the way that it created the app store economy and it kind of accelerated all the web companies in e-commerce and gave computer to everybody in their hand. And now we're here. So we're very early. I think this is where we are in a way. So we'll see what Benedict has to say. Who is affected and how much? What happens in a platform shift? The new thing, all tech innovation, investment in company creation switches over inside the technology. So inside tech and outside tech. Inside tech, we get new gatekeepers and new value capture. This is very interesting. And that's something we got to think about. I don't think it's going to name names, but what's true with every tech innovation is there are always gatekeepers who would want to capitalize on value and make sure they stay there as a moat. So OpenAI could be looked as one. Anthropic wants to be a gatekeeper by using regulation, and there are newer markets. So this is also very interesting. And this is the thing that kind of got me excited with RenovateAI. I think this idea of using AI to generate interior design and exterior design pictures that are cheaper, faster, even though not 100% correct, it's a new market. It's niche. It doesn't fit every workflow, but it fits certain workflows, and it unlocks a lot of value. Outside the tech, new tool, dominance is won and lost. Microsoft dominated the PC era, and when the center of gravity shifted to smartphone, it became irrelevant. Well, Microsoft did not become irrelevant, but like Windows, other than gaming, Windows is really more of a cloud OS than this native thing that works, and their smartphone strategy died. That's interesting. So 9080, and this is the iPhone. Early leaders often disappear. The first was not the winner in PC. Browsers, search, social, smartphones. And that's true everywhere. Facebook was not the first social network, right? But they dominate. You don't have to be the first. You don't have to be the first video company. You don't have to be the first AI writer, although I don't recommend anybody builds that. But PC, IBM compatible PC, they dominate. How will the new thing work? We don't know. For every new platform, we forget how many ideas failed and how unclear everything was. Yeah, that's funny. J2ME, oh man. What is WAP? Wireless, some protocol. Nokia was a success until it wasn't. I wouldn't say it's a failure. It was more like, a life cycle of a business. Now here, I am bearish on browsers. Perplexity, if it was a stock, I would short it. Agentic could evolve. MCP, I don't know. But, nobody knows. But what we could say is, with every platform shift, a lot of ideas have failed. It's unclear. We forget how cluster everything was, even back in the internet and mobile eras. Noise, hype, anti-hype. When things are exciting, people get excited. Yeah, this was interesting. I actually don't like this guy. I used to. But I think what he's trying to do is a lot of scaremongering while building Claude Code and, coding agent. Seems to me, he wants regulatory capture. Like he wants AI to be regulated so that, the big companies will be able to proceed and progress and get to regulations, but no startup will be able to compete with Anthropic if it gets badly regulated. So AI will be writing 90% of the code software. Well, sure, if you measure it by lines of code, right? And that's not software engineering. It's not the lines of code that matters. This often brings bubbles, true, and always say this is different. The trouble is they're generally right. Every bubble is different, but it can still be a bubble. This time it's different. But when the dust settles, the world has changed. The internet has gone from a new thing to a basic part of daily life. Online dating is a good example as a metric to see how much of it has become daily life. Is it a good thing or a bad thing? If you ask current generation, they hate it. I don't think people like the internet as much as the golden era of internet was this, in my opinion. This is when it was fun to be online. And then something happened. Everything is a downhill. I guess everybody joined the internet. It used to be exclusive, fun, and it's where you would go to kind of be yourself and find peace, meet like-minded people. Now it feels more like you want to avoid it to find your peace. New platform means new tools and new revenue. It means, typical large enterprise in USA now use 400 to 500 apps. It's crazy. One app, mainframe, PC, dozen of apps, SaaS, 400 to 500 apps, LLMs, what can we automate next? That's interesting. This is an interesting thing to think about. This is an increase in complexity. It also makes the case for micro apps and targeting very niche, specific, specialized things that a business can do and offer that as a service. And maybe what AI can do for businesses, like my own business, is if I had to use like 500 apps, it's complicated, but if I have an AI layer that allows me to use them easily, get a vendor in, get a vendor out, and manage it, and I pay like $5 for each, I don't mind it. I'd rather go for a specialized good solution than a generic, like one HR software that does payroll, timekeeping, performance review. And, if you ever use an HR software, it just sucks. Like it's not good at anything. One way this platform shift is different. For PC, the web, or smartphones, we knew the physical limits of what could happen next year. With LLMs, we don't know how much better this could get. I would argue, now we do know, in a way, 2025. LLMs, not AI per se. LLMs, language model based on the attention hardware, attention algorithm, I think has a limit. You can throw in more compute, but it's diminishing returns after that. That doesn't mean there won't be innovation in engineering, and there won't be clever tools and smartness, a layer of smart engineering on top of it. The race to AGI is afoot. AGI needs multiple further breakthrough. So I think we agree. We don't know how much better it could get, which also means we don't know if it will get better. In the smartphone and PC era, 2004, if you'd asked me, I was sure my computer next year will be faster. Pentium 3, Pentium 4, whatever. It just kept going on and on. I'll have more RAM, I'll have more disk. Smartphones are getting better cameras. We kind of knew that's going to happen. With LLMs, this is not to say it's really going to get smarter. This is also to say, what if it stops getting smarter? And people are betting billions and trillions that somehow next year, the hallucinations are going to go away. So the graph, is it this S-curve? Is it exponential? Or is it to plateau like this? Could be like this. So how will the new thing turn out? If this is only as big as mobile or internet, that seems like enough. Will this be useful? Where is the distribution, value capture, and value destruction? Inside tech. All right. The risk of underinvesting is significantly greater than the risk of overinvesting. It's interesting, right? It's like, we'll rather bet on AI getting smarter, better, and invest in it than not. And which he has to, as Google, right? I mean, he has to. He has a fiduciary duty to take billions of profits that the company makes and reinvest it back into the business. He can't just give it all as dividends or take it back home. But he has to make a bet somewhere, and that bet would be the next phase of technology, which, it's got to be AI. The very worst case would be that we have just pre-built for a couple of years. Such a freaking nerd. I would short Meta like that. I don't think anything interesting is going to come out of it. But they have a moat in ad. Instagram is just a killer app. WhatsApp just has people in it. That failed. Virtual world. So don't take anything he says seriously, to be honest. 3 years of FOMO in big tech. This is a huge new market, a huge threat to all our existing businesses, and we can't miss it. This is a huge opportunity and threat. We can't miss it. It keeps getting better with more CapEx, which is capital expenditure, which is to say we make money from a business and we put it back into the business. How much better? How much CapEx? FOMO drives CapEx. Okay, so this is true, right? If I made $1 million in profit this year, and if I have two options: take the money out of the business, give myself a big check, or put $500,000 back into the business as an investment, assuming that I believe that $500,000 will turn into $2 million in 2 years. And FOMO is a big driver of that. So $400 billion in 2025. Now look at that, $400 billion. The big four companies, which is Meta, AWS, Alphabet, Microsoft, that's the spend on CapEx in 2025. Look at Microsoft. That's the red one. That's huge for Microsoft. Now look at where they were in 2017. It's like 20 billion or $10 billion. So they're spending $120 billion in R&D, and that's research and development. Now that's great for a country, to be honest. If you ever go and look at the R&D spend across countries, you'll find India sucks at R&D spend. A lot of GDP is just consumption. So whether you hate or like AI, you are pessimistic, optimistic about it, doesn't matter. This R&D spend is a long-term bet. Even if everybody fails, there will be good open source knowledge, software, processes, frameworks that will come out of this giant spend. And that sets up the next generation ahead, way ahead. R&D is what builds compounding assets. Land 2025 growth almost doubled, $350 billion in 2025 for the big four alone. So again, this is the CapEx chart, not growth chart. This is how much they're spending. And this is, I don't know what E means. I think it means estimated. A new investment cycle, US data centers construction overtaking offices. As we all, if you've seen the news, look at this chart. This is data centers. It's crazy. There's a lot of jobs. And this is not just US. Google's building one in India as well. So this is a massive inflow of cash in these areas. That's the bottom line. Construction value. So what's going down, by the way? One thing to note is if cash flows in one direction, it's not flowing somewhere else. There's obviously value. It's not zero sum. There's more value and growth and things come out. But eventually, when you're putting CapEx in one area, you're as a business deciding, I'm not going to spend here. So it's also interesting to note what goes down. And so here we say offices, retail and warehouses. There's not much you can make out of it, but just good to see. NVIDIA can't keep up quarterly revenue. If you work at NVIDIA, if you own the stock, good job. I will cash out in about a year though. Peter Thiel sold all NVIDIA, I think 10 days ago. So it's not a bad time to harvest. Not a financial advice, but I would do it. NVIDIA can't keep up. TSMC chip makers, all the chips companies are booming. It's just the FOMO again. The CapEx from Microsoft, the $450 billion, it's going to building the data centers, buying the GPUs, and giving that money to NVIDIA. That's where the money is going. That does not mean something magic, growth or value is being created per se. It could be. But right now, these big techs are spending billions and trillions to buy NVIDIA chips. And that's why the stock's up. User power backlogs becoming a major issue. Right, so power is a bottleneck right now. If everybody's building data centers and they need a lot of power to run these data centers, and AI might add 1%, that's hard to build fast. This is not an issue in China. Interesting. So main constraints, if you see, is extremely significant. The red, utility power. Public opposition is also a constraint, which I think this will grow as people become more aware. And if electricity prices go up, it will become a political point. So this is how politics come in, right? I mean, you're not going to know the details, but you can imagine a populist politician talking about how power, electricity is going up, data center sucks, AI is demon, blah, 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 blah. Make a narrative, make a rhetoric, right? You can't say what's good, what's bad. Now, this is why I often tell my team and other people I meet, data doesn't tell you what and how to think, right? It's a slice and a snapshot of a multi-dimensional, infinitely dimensional world. But if you look at it and make a conclusion, you got to look at other dimensions as well. There are many side effects to everything. Nothing here tells me, at least me, is this good or bad. It does tell me from this data that power is a bottleneck. So there will be some activity, that there will be enough discussions on power and data centers that it will reach news and political rhetorics. And if you're in business of power, it's an interesting opportunity to see and ride the wave, right? So if you were, I don't know, I'm not a power, I'm purely software guy, but if I were in these industries, I would be interested on this trillions of dollars pouring into data centers and see how I could provide some value and capture it, right? Everybody's in need to build these and empower or get their job done. It's been almost impossible to build capacity fast enough since ChatGPT launched. So they're saying there are more users and we have less GPUs and we can't keep up. We now expect the FY26 growth rate to be higher than 25. So this is expectations. Take it with a grain of salt. They are putting money in this expectations, and there might be some growth for 2-3 years. This does not mean automatically that their bets they're the winners. I'll be very careful to make that assumption. CapEx dollar growth will be notably larger. Yeah, so again, this is CapEx growth. This is not growth. This is just saying, again, that all the companies will spend more money back into the business to do more R&D work in expectation that there will be a lot of adoption and usage and revenue value capture. Data center capacity triples, some very large numbers, although some of the bragawatts, interesting, may be more performative than real global data center capacity estimates. So these are estimates of data center capacity in bragawatts. Wait, gigawatts. So that's the current, and I think McKinsey and everybody is estimating it to be higher. All these firms. This is 2030. It's really not even. It's almost doubling in size, but it's not like 10 times. So most people are saying about 5 years from now, triples. I don't say triples. Maybe triples here. $3 trillion. So that's the number. Annualized AI capex aspirations, a similar magnitude to mature global capital-intensive industries. Interesting. So amount of capex aspiration, the money being spent, a bet on the future. You can, one way to substitute capex aspiration is think about this as VC funding, right? It's venture funding. We're putting money into a startup. We don't know it's going to fail or succeed. That money is similar magnitude to mature global capital-intensive industries. The entire capital-intensive industries, the mature ones, were now similar to the amount of VC funds and capital expenditure in our tech. So Gen AI is 700 billion. Oil and gas is 540. Global telecom is 300 billion. So all of telephony, oil and gas, 540 billion. And this is going to go up. It's going to go to $1 trillion. And US private sector is 20 trillion. Just for comparison. The hyperscalers can afford it. Yeah, who can afford it? Big tech cash flow has surged since the pandemic. Not because of AI. That's different. The most of that growth is going on AI capex. Okay, and that money is being flown into AI. So, which just makes sense. So capex and free cash flow, 2010 to 2025. Alphabet, the yellow, red is the money I'm investing, the money I'm making. So as you could see, I'm investing pretty much more than I'm making now. On Alphabet side. Look at Amazon, or Meta, oh my God, Microsoft, still balanced. But look at this increase. So this is what's driving the excitement, right? Now, if you think about it, it's these big four, big tech companies. Look at this. This is crazy from Amazon. I did not anticipate this. This is, well, look, here it's negative. Amazon is famous for zero cash flow. They were not profitable until 2010. And I think Bezos always wrote that in the shareholder letters. Why that's a good thing. And he said, because we are investing into the future. And which is fine because his bets have played out well. And that's what entrepreneurship is. You're betting on the future. And you're a good entrepreneur if you can predict the future better than others. So as long as you can keep growing, the hyperscalers can afford it up to a point. Capital leases are not new, but they have got a lot bigger. So there's a new entry in this chart, leases, Microsoft. Okay, so that's a new spend. If you break down CapEx and just take the part of leases of data centers, I assume, there's a lot of that. Hyperscalers add, okay, so I take it back. So what this means is, capital leases this is the money, this is debt. There's so much FOMO that it's not just spending the cash flow you have, right? That's why this looks bigger than the cash flow generated. You're actually taking debt and spending more money in. So you have negative overall cash flow year over year. This is all bet on the future. So you can imagine, man, the positions of these companies in these battles. It's not easy. It's not simple. But I would say it's much better than having a big business in a country that's just complacent, that's not doing anything. It's just getting cash flow and giving dividends to its shareholders and be like, yeah, we are happy. Why innovate? So this is how you want your markets to be: competitive, FOMO driven, people rapidly innovating and figuring out ways to optimize and betting onto the future. This is a sign of optimism. Optimism is better, right? And there will be people failing, companies failing, right? Meta could die, and that's my optimistic view of the world. Meta dying, but something new will come out better. Hyperscalers add leases and debts, while some analysts suggest Oracle's cloud capex might be greater than 100% of revenue. So not just cash flow, not just revenue minus expense. It's like 100% of revenue is going back into the business to spend. So obviously they're taking on debt to pay the salary. Oracle isn't answering the hardest question about its AI plans. Software giant boost long-term targets, right? But paying for an artificial intelligence build-out will stretch its resources. Stretch is an understatement. $29 billion data center expansion, right? Now, who's making all this money, right? We got to find out. I'll be very curious to know who are these top 3-5 contractors that are building these data centers in the US. Now, obviously, we know NVIDIA is capturing this value because data centers, construction is one thing, but you're buying these massive machines and GPU clusters, in one hall. You know what I mean? OpenAI joins the club, announces commitments for 30 gigawatt capacity at 1.4 trillion, blah, 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 equivalent to 2/3 of current global base every year. So, that's again bet for the future, right? So OpenAI is like, well, we're going to build data centers as well. And here's the money. And this is where VC is pouring in money. This is again bet on the future, the returns we will get. It shouldn't be hard for me now to see why you could be skeptical about the future when you look at stuff like this. And I will remind you the earlier point that this is not new. Every hype cycle is driven by these kind of crazy spend and market captures and gatekeepers from slide 2. All of these big techs, when you have so much cash and money, and you've innovated already, man. Microsoft is done. Like, what else can they do? It is to get these power centers built up so they become the moat. They have the moat, and they become the karta dharta, in Hindi, of supplying GPU and compute to the world. They want to be this centralized compute that powers the universal AI brain. Circular revenue without its own cash flows. OpenAI partners with NVIDIA. Without its own cash flows, circular revenue. This is so funny. OpenAI partners with NVIDIA, Oracle, SoftBank. OpenAI is buying NVIDIA chips, right? So everybody's giving money to NVIDIA. Meta is giving money to NVIDIA and using the NVIDIA's cash to turn AMD into an NVIDIA competitor and pay Broadcom to make its own chips. Let's understand. Okay, so Microsoft, so what's so interesting is if money is going to NVIDIA, right? A lot of chip buying. NVIDIA is investing $100 billion into OpenAI. NVIDIA is investing into OpenAI. And OpenAI obviously wants chips. And then all of these guys have AMD investments, which is a competition to NVIDIA competitor, and pay Broadcom to make its own chips. So you don't have to understand the nuances, but we all know if there is a capex, money is going somewhere. NVIDIA is making money, and NVIDIA's got a lot of cash flow. And it's giving it, the funny thing is it's giving it back to OpenAI as an investment. So their valuation is going up, right? It's like, I'm going to spend $1 trillion, give it to you. You're going to go back and invest the same money into my business. My valuation is up. I raise more capital, right? And spend more and give more money to you. It's unsustainable at some point, and that's what a bubble is. And it's happening open in public, right? So we could see what's happening. And a lot of these companies, we just saw like Tesla, Microsoft, Oracle, OpenAI, and NVIDIA, they have these like $1 billion strategy and partnership and blah, 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 blah. None of this is illegal per se, but know that nobody can create value out of thin air. The money will evaporate if there's no real value. And the value comes from real innovation and adoption of AI. If it's not helping me be productive and using it in my job, and I'm not producing double the value I was before, I'm not going to use your tool. And this doesn't sustain. You can't create money. Rational actors, what would you do if your company was sitting on a bubble? Good question, right? What would you do? NVIDIA, because everybody's giving, if I'm NVIDIA, I've got 72 billion of TTM, FCF. I don't know what that means. Oh, of TTM. These are chip manufacturers. They can't keep up with demand. So what would you do with the money? You would use your excess cash to buy demand, FOMO, and platform lock-in. OpenAI has mind share and expensive stock. but no platform infra or moat. Mindshare, which is just the ChatGPT brand, right? Everybody knows what ChatGPT is. Like, that is their biggest moat, in my opinion. An expensive stock, but no platform infra or moat. Swap your paper for hard asset and market position. So what this means is you're taking this vapor money and you're swapping that to hard assets and market positions, which is by investing into this chip makers. Oracle is cash generative, legacy business losing share to cloud, and now to AI. I mean, I just don't even know how Oracle survives, to be honest. Gear up and burn your way into new thing. So I would meditate 20 minutes on this slide if I was not recording, but we have 60 more slides to go. It's interesting to see how all of this is house of cards in a way, right? It is a structure, it is real, but it is house of cards. We don't know which direction the wind will blow. Yes, but where has all this money got us? After 3 years, lots more science and engineering, but no real clarity on shape of the market. So that's true, but I would say that's not the company's fault, right? It's like we can take this position as if it's our right and privilege to say, hey, why haven't you built something awesome? They don't owe you anything. No company owes you anything unless you pay them. So that's true because of the nature of technology. Nobody understands AI in a way, right? There are emerging properties to LLMs. What we engineer on top of it is not clear. What products will work is not clear. So the statement is true, but not as if there's this big conspiracy that's going on. Models still improving, far more models, China, OSS, lots of new acronym, no apparent moats, no clarity on product or value capture. True. Now we could debate what does a moat really mean, but I would say Perplexity, for example, has no moat. I don't think they'll survive. IDE, I mean, they're landing. They have made a soft landing with a new model, but again, house of cards. My own company, I don't have any moat, and I don't even want to have one. Or let's just say, it's not that I don't want to have one. It's more like I don't have an obligation to articulate it to a VC who they know nothing other than, what's your moat? Are you going to make 10x money? Prove it to me and take my money. Sure. If you could prove it to me, you can make my money 10x in 3 years. I'll give you money as well. That's not rocket science. It doesn't take any brain power, but I don't have to prove it. I know my conviction. I know how we operate. I know my execution style, and that's the moat. I am the fucking moat, right? As a founder, you got to be the moat. What decisions you make. You're riding very uncertain times. Which direction, which distractions do you avoid? And more or less, can you avoid FOMO? That's the moat. What kind of person you are? Are you going to crumble? That's the moat. Right now. Over time, when you become like a company at this scale, it's not the founder personality that matters. It's numbers and these definitions, these abstractions that matters. Okay. Far more models every week, new models, new benchmark, new acronyms, models by aggregate benchmark scores. Wow. So that's the number of LLM models with benchmark. Yep. I mean, I'm not surprised. Models converge and leaders change weekly. Yep. This Anthropic, Gemini 3 just launched. All good. Tech versus brand versus distribution. Weekly active users of generative AI tool as share of population. As you can see, look at that, ChatGPT, 23%. Then it's Google. This was, I would say 5% 1 year ago. Look at Claude, just like right here. Meta AI is actually higher than I would have imagined. I think it's likely because of Instagram and distribution. I can't imagine me logging in and using Meta AI as a standalone software. UK, now that's US. As you can see, ChatGPT dominates. Google is high on Japan, which is interesting to see. 800 million weekly users, but apparently only 5% are paying. Why not announce weekly active users and not daily active users? Yeah, why didn't you do that? That's a good point. When people announce a metric, like we have 800 weekly users, the questions you got to ask is, okay, then what about daily? What about monthly? Why did you share weekly? But still a huge number. And it's free, right? So why wouldn't you use ChatGPT? That doesn't tell you anything per se. Still more experimentation than daily use. Consumer generative AI chatbot use, USA, monthly, weekly, daily. Now here's the thing. So as you could see, daily is about 10%. Most data shows the same picture. But by the way, I'll go back here. It's interesting to note. I use AI daily. I'm in this 10%, partly because I'm tech and I run an AI company. But majority of people outside of 50%, they've not even used ChatGPT as per this graph or AI chatbots. This is from Deloitte survey. Most data shows the same picture. Surveys are early, scattered, and inconsistent, but an engagement gap seems clear. Not just Deloitte, now these are other surveys. They're all saying the same thing. Look at this ceiling, right? There are about 10% daily user of AI and about 30 to 40% of weekly users once in a week. 50% have never used a chatbot. It's 2025. So sometimes you got to ask yourself, do I live in a bubble? Do I imagine? We all live in some kind of bubble. And half the world doesn't give a F. Is this just early or harder problem? Why do most users of ChatGPT only use it a little bit? Good question. How many use cases are an obvious easy fit? Who has a flexible job and consciously looks for ways to optimize? For everyone else, do you need to wrap this in tooling and product? All good questions. Now, these are all good questions for entrepreneurs. Building, right? You look at the data, I'll give you my answers. For everyone else, do you need to wrap this into wrap? So it depends on what you mean by this, but everything is a wrapper in one way or the other. You got to engineer layers of value on top of existing foundations. People don't know what they want until you show it to them. You've got to start with the experience and work backwards from technology. So where does the model lab compete? Where is the value capture for research heavy? Yeah, that's a good question. Good question. Really good question. For research heavy, capital intensive commodity. That's funny. It's funny how this is an unusual statement, by the way, because anything that's research heavy and R&D is innovative. Innovation by default is not a commodity. So the question is, it's kind of framing it in a funny way. It's calling the models, LLMs, which we are still spending a lot of money on, research heavy, very capital intensive because it requires a lot of money for compute, a commodity, which is, there's nothing unusual about it. It's just commodity. It's easily available. So how do you capture value? Go down the stack, win on scale, because by giving it free and cheap. If the models are commodities and don't have network effects, okay, if they don't, go up the stack, win on network effect and product, see software. So this is where most of my focus and most of the founders live, right? The application stack. I will not, even if a VC came and gave, hey, I'll give you a $500 million check. You wanna go compete on foundation models? I wouldn't do it. I don't enjoy it. And plus, as you saw, Microsoft, OpenAI, it's all about investments, right? It turns into an investment game rather than innovation. So application is where you innovate, you understand consumer behavior, you provide value. And engineering is making a perfect system using imperfect parts. Remember that. I don't care how badly the AI hallucinates under the hood. The engineering skills and the layers on top, the purpose of that is to turn that into a perfect system. Take all the imperfect parts, cancel each other out, make it perfect. We can have layers changing underneath, but you live in a happy place and you're not bothered by a lot of these tectonic shifts. Microsoft shifts away from network effect, from competing on network effects to competing on access to capital. So isn't it interesting? What is the competition on now at a foundation level? It's a competition on access to capital. How much money can we raise? And we invest by getting debts. So CapEx is higher. For OpenAI, yes to everything. When other people, that's so funny. Before the market, so it's like OpenAI is like, oh, we'll do infra deals, Oracle, NVIDIA, e-commerce integration, app platform, social video apps, robot, Johnny Ive. Well, this is what you do when you have a lot of money. And your job is to double the money. Right? What you going to do? You're not going to go buy stocks. You're a company, you're a business. You can hire people. That's what you do. You hire people and try to figure out what can we do, right? What can we build? What can we sell? So you figure out everything else. So it's interesting to see how much this lacks focus in a way, which is fine though. I mean, it doesn't hurt me per se. It doesn't hurt you. It's what it is. There are two ways to make money. You can bundle and you can unbundle. This quote comes up with Benedict Evans' presentation, I think every time. Just to give you an example, to bundle means, think of cable TV. Imagine selling single cable subscription for $90 and imagine Netflix, which is one channel. That's unbundling. You've got to unbundle cable into, you control your own movie. And there's value there. You can make money by that. There's also value in, there's a lot of channels like Netflix, Amazon Prime, Apple TV. What if I give you one subscription for $15 and then you can get all three? That's called bundling. So in the market, you can always bundle and unbundle to create value. It's time-proven method. OpenAI bundles and unbundles use cases. What's the right experience, the right distribution, and why isn't it just a ChatGPT app? Yeah, well, I would just say it's pretty hard to build a product and they don't know. I know Evan is coming from pure. He has no bias towards technology, right? So he has no sympathy over crap. Me, in the trenches, if you worked in AI, we have no freaking idea what will stick, what will not work. So it's right to call it out though. What's the right experience, right distribution? Why isn't it just the ChatGPT app, right? Like say Booking.com goes to Booking. Why isn't that just an app? Why does it need third party? Atlas is a new browser, blah, blah. I don't know if you used Atlas. I installed it and uninstalled it the same day. Startup exits to unbundle use cases. The coming wave of AI startups trying to unbundle Google, Excel. So Google unbundling would be, you have your own spreadsheet app, blah, blah, blah. And ChatGPT. So that's what YC people will try to do. We'll take like one thing of Google and try to unbundle it, offer it as a very specialized app. All the AI companies versus non-AI companies in YC. Look at the 5-year difference. Everything's AI now. Where is the value capture? If models are near commodities and we don't know the right product, where will the value be? I'll give you my low-key, small boutique company answer, but at a macro level, world level, let's see what Evans says. Best model? Nah, that's not winning. Most capital. Proprietary data? Distribution, go-to-market, product, UX. I mean, that's, to be honest, always true. It's tautological to say this. Building normal software companies. Funny. So that's a question. He doesn't answer it. I'll tell you. You don't know the right products. Your value lies in iteration speed. If you can build a product, throw it out, get feedback, iterate fast, you're winning. Most companies can do that. Big companies can iterate fast, can take feedback so quickly and mold. And imagine you are making a pot, a clay pot on this wheel, right? And you're able to kind of mold it in real time. That requires extreme awareness of what the feedback is, what's working, what's not working, failing fast, and figuring out a lot of small things. And then also keeping the complexity low, not AI slop, because you don't want entropy in your system. Your speed slows down as the product grows, and that's bad. So you got to ship new features, products, mature it faster than everybody else. That's where the value is. You will be winning in software, pure software, not in retail. What's our AI strategy? Okay, well, it's 1 hour. I'm going to end this here. Maybe we'll do part 2.